Welcome to zForex. Today we will explore what commodities are and their role in the trading ecosystem. Ready? Let's get started. Commodities are basic goods used in commerce that are interchangeable with other goods of the same type. They are required in the production of other goods or services. Commodities can be traded on exchanges and are known for their tangible and often raw material nature. Commodities are generally classified into two categories: hard commodities and soft commodities. Hard commodities include examples such as gold, silver, oil, natural gas, and metals. These are typically standardized and durable. On the other hand, soft commodities consist of items like coffee, cotton, wheat, and sugar. Unlike hard commodities, they are perishable and easily affected by weather conditions and seasonal changes. Hard commodities are usually mined or extracted, whereas soft commodities are grown or harvested. There are various methods to invest in commodities, such as buying physical commodities, trading as CFDs, and investing in relevant ETFs. Trading commodities as CFD allows traders to speculate on price movements without owning the physical product. At zForex, you can open a trading account and access MetaTrader 5 and cTrader platform to trade commodities with ease. Once you have registered and deposited to your account, simply pick the instrument you are interested in and open a position, either short or long. It's that simple. If you need guidance, watch our video on how to open your first position. Commodity prices are influenced by various factors such as supply and demand, global events like weather and political instability, and production costs. Commodities play an important role in the global economy. They can directly impact inflation rates, company performances, and the overall economic health, as they are production inputs or raw materials for many industries. Commodities can also be used to hedge against risk in the other investments. For example, if you have a long position on a stock CFD and that particular stock has a negative correlation with oil, you might consider hedging part of your position by opening a short position in a crude oil. Thank you for watching us. That was just a quick overview of the commodity market. Please don't forget to subscribe to our YouTube channel for the next videos.